It gives me great pleasure now to bring on board Pieter Elbers, CEO of IndiGo on ET Now for an exclusive interaction. Peter, this is your first time on ET Now, so very warm welcome and what a pleasure to have you. Now, IndiGo for the quarter gone by has reported super duper and bumper profits. What has led to this uptick? Are these numbers sustainable? And do you think the effect of seasonality will be felt in coming quarters?
We indeed had a very strong quarter. The third quarter had a record number in terms of revenues. And basically what we do see is a combination of two factors. Of course, there's a very strong market demand in the market post-COVID and recovery which is going on. That's clearly one aspect. The other aspect really is a whole range of actions we have taken over the past period in order to improve our performance. And therefore we see it back with both a better financial performance, operational performance and customer experience. So the results of these actions will continue also going forward.
Your yields are at 5.3, which is a record high. Do you see now going forward as the entire aviation sector is normalizing, 5 rupees yield could be the new normal?
If we look at the yield development, we see that the Romand was very robust in the third quarter, which is a combination, I guess, of some pent-up demand, which is post-COVID, and the strong development of the Indian economy. If we take a bit of a step back, it's not only in India where we see stronger yields, but also outside India and other markets. Basically, on the global basis, we see prices going up, which again also part of the inflation kicks in. What's important for us is that we continue to develop our network and to continue to develop the 3 pillars of what we have at IndiGo: on-time performance, hassle-free and courteous service and affordable fares. And on many of these routes we do have competition indeed, but with the situation and a strong market demand we continue to build on that.
What will change because of entry of Akasa and Air India? Could there be a challenge for IndiGo to maintain market share, because your market share has already gone down by about 3 to 3.5%?
Well, market share for us at IndiGo has never been an objective in itself. If we compare the situation prior to COVID, we had a lower market share. Then during COVID, we have been able to keep the operation going, and today's market share is what it is. The competitors you just mentioned were already active also in the third quarter. And the fact that there's more players in the Indian market, it's good for the consumer, it's good for us. And I think it speaks to the size of the Indian market. And a market of the size we see here in India can easily sustain multiple carriers. So with that, it's a fact of life that there's competition, which again is a good thing. And there will be always seasonal fluctuations in yield levels.
For last couple of years, because of the COVID base, your growth is about 50%. But pre-COVID, the average growth rate was about 20%. Do you think that could come back? And also, in order to grow at 20%, are you looking at adding more capacity to service demand?
We have seen that, in fact, for this very present year, we gave an initial capacity guidance of 13 to 70% growth in the full year 23 as compared to the previous year. We expect now to end up pretty much at the high end of that range. I think it speaks for the agility of IndiGo in order to adjust capacity when needed or when market circumstances so dictate. So the capacity range and capacity guidance we gave for the year 23 will be ending at that high-end range of 13 to 17%. Going forward for the next year, we expect to operate on a capacity level somewhere in the north of the mid-teens in terms of capacity level. We keep a high level of flexibility and agility going forward, and we do expect actually also for next year we'll have a combination of still some pent-up demand. I mean, just take a look at the total market. The total market is not yet back to the levels that were pre-COVID. IndiGo is higher, but the market in total is not yet back. So we expect that robust market to continue. And in many growing markets, and India is obviously one of them, a factor of double the size of GDP for aviation growth in general is usually a good benchmark. So with that, we feel confident in giving a capacity guidance somewhere in the north part of the mid-teens for next year.
You've expanded your fleet, and now IndiGo has Boeing as well as Airbus. Why have you added Boeing fleet to your portfolio, and what kind of impact do you think that will have now that you'll have to manage both Airbus as well as Boeing?
No, we have been confronted with some issues in the supply chain, and we've mentioned that at earlier calls and in earlier situations. So as basically on a global basis, we see a challenge in the supply chain. That has led to a whole range of measures for us to mitigate that. And despite the supply chain issues, we could still maintain our capacity guidance. The supply chain issues basically have been dealt with by extension of some leases, by keeping some of the CEOs in operation, and also this wide body operation which we have launched very recently, which are leased for a short-term basis, is part of the mitigating measures in order to deal with the global supply chain issues. So it's not a structural solution, it's a temporary solution in order to deal with the supply chain issues, and at the same time making sure that we serve the market demand.
In terms of specific, right now you are flying India to Turkey. Is this one-off, and what is your arrangement with Turkish Airlines?
Turkish Airlines is one of the first, if not the first partner IndiGo had for some years already. We operate with several different partners in a partnership, and again Turkish Airlines is one of the first ones, and we have a close partnership with Turkish Airlines. So in order to again deal with the capacity situation and the OAG situation caused by the supply chain, we made an arrangement with Turkish Airlines to temporarily lease these aircraft from Turkish Airlines to operate on that route specifically.
So what is your plan going forward? Are you looking at inducting more wide body aircraft to your fleet?
No, today the focus is on the existing routes of IndiGo and not to have new routes offered on that.
But would you be exploring more routes going forward then, Peter?
No, as I said, today's focus is this. We have the Airbus XLR on order for the years to come, so we will have the opportunity, once the XLR will be delivered in 24, 25, whatever the precise time frame will be, to have the opportunity to explore more international markets. That's our focus today, so we wait for the XLR to come and to move forward from that point in time.
You got a big war chest of about 10,000 crores now. How are you planning to utilize it? How are you planning to use it?
I would like to make a separation between our cash position and our sort of international strategy. Our cash position will of course help us to solidify the company, and maybe it's good to just reflect a little bit where we're coming from. And obviously the past quarters have been very much influenced by the enormous negative impact of COVID. So from that angle, companies like us, which goes for all the airlines in the world really, are needing these type of profits in order to recover from COVID and start to invest in the future. When it comes to internationalization, today we do operate roughly 23% of our available seat kilometers on international routes. We expect for the year to come that percentage to go up as to further develop our international network.
Fleet expansion, what are your plans? Would you be adding more capacity in the domestic market or in the international market?
Well, the very strong basis of IndiGo is obviously our domestic network. We do operate today to 76 domestic destinations in India, and as such, and we proudly say that, giving wings to the nation and help to develop many communities in India. Of course, not only the tier 1 cities, but even tier 2, tier 3, and whatever other tiers one may classify. That development of the domestic network will continue. I mean, today we announced our 77th and 78th domestic destination to be opened in March. So that development of the domestic network will go on. Hand in hand with that, we will develop our international network going forward. And I think the very strong foundation of our domestic network also allows us to further develop our international network, as we do see a lot of passengers even connecting on our international flight coming from smaller Indian cities and using our international network. And the fact that basically India was not having a strong hub we can really help with our network to develop the hubs in India and to make sure that that connectivity from all the Indian cities to international can take place in our hubs. And the geographical spread of India with our international network from Delhi is very different than our international network from Hyderabad, and that combination really will help us moving forward.
Now that there is more clarity on which way the Tata Airline business would move, and especially after Air Vistara and Air India coming together, what is your plan in place in order to really protect your market share, especially in the corporate travel market?
Well, I think firstly it is good to look at the Indian market as a total, and the fact that the Indian market will have some consolidation and some strong players eventually will be good for the market. It will create a certain stability and predictiveness for consumers as well, which I think is a good thing. For us at IndiGo, of course, we look to what competition is doing, but we very much rely and continue to focus on our own strength and our own strong points. And the fact that the combination of affordable fares with an unparalleled domestic network will remain the very core of our strategy. And yes, in that configuration, we will compete with the Air India group or the different airlines in that segment. But we continue to focus on what have been the strongholds of IndiGo: on-time performance, hassle-free and courteous service, and affordable fares in combination with an unparalleled network.
And finally, how has been the performance of your cargo business? That's a business which IndiGo incubated post-pandemic. Can you share updates on that?
Well, we welcomed our first freighter in the third quarter. At the end of the third quarter, the second freighter was welcomed. So I would say we're still at the very early stages of the development of our cargo strategy. Obviously, with the domestic load factors coming higher, our domestic network has some cargo capacity, but part of that capacity is now being absorbed also with luggage. So the fact that we do have the two freighters is a welcome additional capacity to that. Going forward, we'll further develop our cargo strategy as one of the elements of the IndiGo business. As a part and as a share of the total, it's still very much limited. Again, we expect to continue to grow our passenger business even quicker than our cargo business, but we see it as a nice and as a solid supplement to the basis of the company, and there's definitely room to grow forward on that cargo side. That's why we have invested in these two freighters.
Fantastic to have you on ET Now. Thank you so very much for accommodating this interview request.